over the years, with your experience, has the steps you've taken for due diligence on any of your investments, has it changed now versus, a couple of years ago when the market was really hot? So, Chris, Rick, if you want to start, you have Mike, Chris, whatever.
I'll start and let these guys go. If you don't learn quick, you're out. So you get better as you start doing deals. And so besides due diligence, we have a pretty neat little private lender community where we get together and share notes. And, I call it the good, the bad, and the ugly. We don't know who the good, bad, and the ugly are in town, right? So there's a lot of fraud out there. And there's guys, I know guys I've got taken for $750,000 and such doing private money lending. Other guys, it's got, so yeah, you have to learn pretty quick on the due diligence. I think one of the best I've heard is Abe. Is Abe still around? Blink does a great job at their due diligence. If you ever hear Paul or Gabe talk, they're really good. But whether, it doesn't matter who you are, if you're going to survive, you've got to be good in your due diligence. You're going to learn. And we do a lot more now than we did when we first started.
Yeah.
I think we're a lot better at it. And you always get better at it too.
Yeah.
Yeah, I mean, personally, my strategy's changed over the years. It went from rentals to flips, and then now it's back to holding properties. So that obviously changes. But it's funny, like early on, like you're so nervous to even like do a deal. Like you want to do a deal, but you don't know what you don't know, so you're very cautious. And I remember the realtor I was using on the first deal that my wife and I did. He was like, "You are the most cautious investor I know." And this goes back to what Rick was saying. This is back in like the 2010 era where like in hindsight, because I remember looking at a deal and I was like, dude, like this is below the cost to build the house. Like what's with all these properties? And I kept asking him questions. He's like, "You're the most cautious investor I ever know." In hindsight, I wish I bought all of them. But so it went from very cautious to being a bit more aggressive. Then you get burned. And they're like, okay, well, don't do that again. So how can I put a check to where you check for foundation? I can put a check for checking for termites and all these things. So it's just a constant learning process in the due diligence. But starting out, what I tell folks is underwrite a property or two a day, every single day. And eventually you get to a point to whether you're buying them or not, you get to a point where like when you see one, like you just know it. You know this is a pretty good deal. You get that quick assessment you can do pretty much in your head or within a couple minutes. And it's a little bit more complicated with multifamily, but I'm sure it has a similar vibe to where when you see a good deal, you just recognize it just because of the repetitions. When you start swinging the bat long enough, you know that when that good pitch is coming, you can hit a home run.
Pattern recognition, right? So yeah, on our side, we obviously buy to hold these deals for the most part. So I think what's changed, we've always been pretty diligent about this, but I think what's changed is in the past, we had a margin of safety to ensure that, should we be off by a certain factor, we'll be okay. And in the past, what's also happened is that we used to have to rely on third-party data sources or third-party property management companies, right, using their data, their information. That's fine. What's happened over time is we've shifted things to where we've insourced it. So we have our own boots on the ground. We have the true data, whether it's doctored or not. We can't tell from it when it's a third party, but we have the true boots on the ground, and we built out systems and teams and technology to get data on an accurate basis. So it's not something that's updated maybe once a month. We update it quite literally on a daily basis. So we know exactly what's going on. For example, that deal that I mentioned in Austin, whenever we initially bought the deal, we assumed we can bump rents about $300. Now we have more boots on the ground, more data on a regular basis. We're expecting actually to be closer to $900 increase, but that's not what we underwrote. So, obviously our investors are probably pretty happy at that. But that's pretty interesting. So for our deals, whenever we actually get into a deal, our due diligence consists of literally going through every single unit physically, boots on the ground, walking them with our team to document exactly what it needs and knowing for sure what the actual cost is going to be. We bring the contract teams out on site that same day so they can give us a real bid, and they may need a day or two to put it together, but they can see the data for themselves, not just, hey, I kind of need this, maybe a little bit of that. You're the expert, you tell me, right? So they get to see it with their own eyes. And then also on the contracts, the actual lease agreements, we go through every single one and document exactly what that consists of. Because what you'll find is a lot of people, whenever they try to sell the deal, they want to make it look pretty, right? So they might say, yeah, it's fully occupied, it has 100% or 98% occupancy. That looks great, but guess what? they fill them all up in the last 6 months with some crappy tenants that aren't going to last. You're going to have to end up evicting them, which ultimately it's going to impact you in a couple months. But when at the time of sale, it looks great. So you have to be very diligent about that side. Who are the actual quality tenants? What looks normal over the life of the deal? And then what can you expect going forward, right? So I think the difference has been that we've been a lot more diligent. Instead of saying, yeah, we'll budget $3 to $3.5 million for this kind of service, we get out there and we see more specifically, okay, this is actually going to cost 2.9, whatever. So we know exactly what the costs are going to be, and then we have our teams being on boots on the ground, so we can know for sure with our own eyes what to expect. And then the other thing too that maybe I didn't mention is that I mentioned that we were vertically integrated, but aside from the investment arm and the property management arm, we've also been able to build our own insurance company and financing company. So it's pretty interesting. And what's nice about that is that, and again, this is leveraging technology. So for example, we have a partnership with one of the best multifamily insurance guys in the country, probably one of the top 5 guys out there. Great guy, doesn't know how to build a business. We do. So that's where we got involved. And what's nice is what used to take him probably 3 to 4 weeks to do, to underwrite a deal, get it bonded and insured, and all done with, used to take 3 to 4 weeks. We're doing it now in 6 minutes. So it's incredible. What that does though, we've grown that business significantly, and we get to see the data of all the other players out there. So obviously there's a level of anonymity, so it's fair and it's not any sort of private confidential data, but we get to see in aggregate what's going on, not just in the markets that we're in, but also other markets. So whenever we look at a market and say, that looks like a pretty attractive market, well, let's see what others are actually doing. Because it's not something that they're pitching to somebody. This is real data they have to provide to the insurance companies, to the banks. This is real data, right? So this is as accurate as it can get. So we can get an idea and see what are the patterns and determine, well, where do we actually want to go after? Where is it worth going after? And how should we set expectations relative to the market? Are we in line? Are we being overly aggressive? Or are we being overly conservative in this room to move up further? So that's kind of been the shift, if you will, over time for us.